As the golden boy, Adam Neumann, who founded WeWork, has slunk back into the back shadows after his IPO totally collapsed, you've got to look at whether investor, and I'm talking about early investor ebullience, worked the valuation way too high, or whether the company itself was just a real piece of work. Who wasn't surprised? Well, Charlie Gasparino knows. He's got exclusive insight on people who actually were able to trade.
SoftBank was very ebullient.
Ebullient.
Ebullient. Is that the right word?
Ebullient.
It's one of those $3 SAT words that Liz likes throwing at me every now and then.
That's an easy one.
Okay, but it was SoftBank, which valued at $45 billion, whatever it was.
47.
47. But it was the traders in the pre-IPO market that snuffed this thing out. I mean,
sniffed.
Snuffed or sniffed?
They
let me tell you something. They figured it
out.
One or the other. They figured it out. This thing for about a year, and we should point out that Mr. Neumann sold some of his shares.
A lot of them.
We have calls out to him. We don't know exactly what.
Where is he?
I don't know.
Anybody seen him?
I haven't heard.
Has anybody out there seen him? Tweet us and let us know.
Yeah, good-looking guy, huh? But in any event.
Yeah, look what that got him.
Look what that got him. The investors in the private market smelled this a mile away. The shares were almost illiquid, I am told, in the pre-IPO market. Everybody thinks that you can't trade stock unless a company goes public. Well, the average Joe can't. And by the way, Jay Clayton, the SEC chairman, wants to change that. He wants to figure out a way to help small investors get access to this very vibrant market that occurs privately, where the pre-IPO shares, stakes in companies, are actually being traded among sophisticated investors. And what was fascinating about WeWork, and I've been speaking with traders today a lot about this, is that they didn't trade much, or when it did trade, you got a huge discount to the valuation that SoftBank was putting on.
What did they see?
Well, they said basically that this company wasn't what it was. It was somewhat of a fugazi. It was not. It was financially not. Now
that's not an SAT word.
No, that's definitely an Italian word from the Bronx and Brooklyn, and made famous by Donnie Brasco, the great mob movie, where he looked at a fake gem and said it's a fugazi. But that's what, I don't think WeWork is quite a fugazi, but it is a troubled company where the finances and the concept was not matching the valuation. So they pulled the IPO. We all know that. But it was totally predicted by the pre-IPO market. We should point out that Uber's IPO was kind of lousy, right? Totally predicted by the pre-IPO market. So this market does sniff out some of the bad actors, or some of the bad players that are going public. We should point out that one of I think the good things about WeWork is it didn't go public, right? So the public didn't get its hands on a falling knife. You know what I'm saying? Uber was kind of a falling knife. Peloton, not so great, obviously. I guess what's the next big one that's coming? We're having another big IPOs coming. Bed Bath & Beyond or something like that?
Bed Bath & Beyond is already public.
Who's coming now?
Well, the big one is Airbnb.
Airbnb, that was the one. That one, from what I understand...
They'll do direct listing.
Yeah, but that one I hear the trading is pretty good. It's pretty ebullient, both in the secondary... Ebullient, both in the secondary and the primary.
I can't.
That one is matching up to the hype, from what I understand. So, listen, you're the small investor. You want to invest in IPOs? We're going to help you. I don't make recommendations. I can just tell you what the sophisticated guys are saying. They were negative on WeWork. They're better on Airbnb right now. They're very good on it, from what I understand.
Charlie, thank you very much.